Talk to us about what Beijing is telling the world about its economic priorities with this report.
Beijing is telling us that the Chinese economy is in transition. It is transitioning from an economy based on property and infrastructure development to a knowledge economy that's based on high tech and what China calls new productive forces that were outlined in the previous segment. China is trying to promote consumption, but there really weren't firm targets on that. Increasing consumption could mean expanding the social safety net, which would be very useful for the Chinese people. But high tech really will take the priority going forward.
And, you know, China's growth target has now dropped to between 4.5 to 5%. Is that reflective of this transition you speak of? What's been the reaction so far?
Yeah, it's not unexpected. I think that China has been messaging for a while that the growth would decrease somewhat, and growth has been decreasing slowly in recent years. This is very realistic. There just aren't as many roads, bridges, and houses to build as there were 40 years ago. I think that this target also reflects the aspiration of the Chinese leadership to focus on higher quality growth. I think another important aspect is that a little bit lower rate gives local governments, which are under some pressure, realistic growth rates so that they can better manage their local economies.
So what tools and strategies does Beijing have left to hit that target if domestic demand remains fairly weak?
Well, to boost demand, they have several options. One is subsidies or stimulus, which the government really hasn't favored because Chinese people tend to take stimulus and rather than buying things to pocket the money instead, which doesn't help the economy as much. Subsidies are another tool that the government can use. And the government, for example, has provided subsidies to purchase consumer goods to replace old goods. There are regulatory measures that can be taken. The government has made it a little bit easier in recent years to buy houses. The government could remove residence restrictions. This is the Chinese hukou system in order to stimulate things. But the best thing the government could do is probably fiscal measures that would increase the social safety net, provide services for real people, provide some pension reform perhaps, and that would probably do the most, I think, to increase consumption.
So given that Beijing wants to boost this domestic consumption, what role does the industry shifting from property-led growth to manufacturing and tech-led growth play in these kinds of policies that will actually move the needle where it needs to go?
Well, China has very much emphasized technology in recent years, has emphasized electric vehicles, for example, and those are the real emphasis. And when you look at the numbers that are coming out in the work report, that's where the money is really going to go. So China has a bet. China has various structural problems that the government realizes and understands. They are betting that these new productive forces will enable the Chinese economy to raise all boats and overcome those traditional problems and thereby increase living standards for the Chinese people.
And does this sort of, shift towards manufacturing or, advanced AI, does this play out in a more significant role in terms of global trade, particularly this year?
Well, yes. There's a problem here, a paradox, and that is that AI is the future, and AI produces more efficiently than manufacturing than previously, but AI may cause unemployment as well, and that could cause problems. I think in terms of the overall global market, however, there really is no change in China's trading posture. China wants to export overseas and needs to do so and has had a record surplus of more than $1 trillion. And as far as I can tell in the work report, there is no effort to curb that in any way. And that is causing increasing trouble overseas, where countries are afraid of deindustrialization, overcapacity, and predatory pricing. And I think that all of this is going to guarantee that the trade friction that we've seen in the past is going to continue and may actually get a little bit worse.
So given AI's impact on jobs, can you talk to us a little bit about the contradiction that this work report aims to boost jobs across China? How might Beijing manage that contradiction moving forward?
Well, unemployment, specifically youth unemployment, is a major problem, exceeding 20% according to some statistics. So AI, we really don't know how AI is going to play out yet. There are many areas where AI could increase employment. Past technological revolutions, the technology has increased employment in areas that we can't foresee yet. But in the short term, we're seeing in the United States here, for example, that companies are actually reducing staff in anticipation of what AI is going to do. So this is a challenge that all countries are managing, not just China, but China's heavy reliance on AI as a matter of national policy, I think, is going to make the situation perhaps more acute in China.